let's meet the protagonist, or no, actually antagonist of our story, whose name is Chris. For whatever reason, Chris had unrestricted access to his dad's bank account. He blew $17,000 on incredibly risky short-term put options, as well as taking on $5,000 of debt. The funniest part is that this was in early April, which was a time of great turmoil in the markets. Put options make money when stocks go down, so really must have taken an incredible amount of incompetence to somehow lose money in this situation. Obviously, Chris's dad was not happy about this, and we get this gem of a conversation. Now, this loss might seem pretty grim, but just remember,
nobody believes in you. You lost again and again and again. The lights are cut off, but you're still looking at your dream, reviewing it every day and saying to yourself, it's not over until I win.
Now, this wasn't even posted on WallStreetBets, but this might be the one subreddit that's more degenerate than that, r/the race to 10 million. It's filled with broke college students with $500 in the Robinhood account, convinced that they can turn it into 10 million within a week. And inevitably, they lose it all. So, user Backdoor Teacher had $1.5 million and decided that investing all of it into Spirit Airlines right before they went bankrupt was the best plan. He apparently quote-unquote trusted the words of a CEO, which is obviously the most reliable source out there. And so he just casually lost 6 figures worth of money, just like that. But it doesn't end there. He will not accept defeat this easily. He actually has a plan as to how he's going to reap back his losses. His great strategy is to meet up with someone with over $1 million of capital gains and work out a deal with them so that the other person can use his losses to deduct some of their taxes. What does that deal entail, you're asking? Well, there's no real way to transfer capital losses unless you marry them. Screw Tinder, r/the race to 10 million is really where you'll find the love of your life. Obviously, the comments clowned the hell out of him, but he remained arrogant. Guess some people never learn. Hey, if anyone watching this video is single and interested, you know exactly where to find him. The first 2 losses were absolutely outlandish, but this one is just plain and simple losing money. But there's something beautiful about that too. Listen, from degen to degen, if your portfolio history looks like this, consistently losing money for upwards of 2 years during both bull and bear markets, it might be time to reevaluate your trading strategy or lack thereof. Instead of pursuing his finance degree, he used his college fund money and all of his McDonald's paychecks to gamble, and clearly it didn't turn out very well for him. Maybe if he had gone to college, he would have learned how not to do this. Please don't gamble money you can't afford to lose. He went from flipping burgers to flipping options, and it seems like neither worked out particularly well for him. Dude, if your life savings is this susceptible to a single tweet, then there probably is somewhat of a problem with your trading strategy. As aforementioned, April was a time of great turmoil in the markets, and so user NoAnteater5184 is having fun with his put options. However, as soon as it was announced that we would be pausing the tariffs, stocks rocketed up upwards of 10% in a matter of hours, having their best day since 2008. This absolutely wrecks his portfolio, losing him upwards of 90% of his money. The funniest part is that he had 2 chances to almost break even and he didn't take either of them. You would think that he would just take whatever he could get, but no. The only person he has to blame is himself. Oh, I just got a letter in the mail. Dear Dingy Hobo, at Fidelity, we believe it is important for investors to periodically review their investment strategies and trading activity to ensure that each is consistent with their investment objective, financial circumstances, and risk tolerance. This is why we want to make you aware that last month, 3,385 trades were executed in your above referenced account, and that the overall equity value of your account decreased by $308,638. Let's put aside the $300,000 loss for a second, since that's pretty self-explanatory. Upwards of 3,000 trades in a month? Why is this dude putting in over 100 transactions per day? Does he not have a full-time job that he's supposedly getting this $300K from? At what point does this become a gambling addiction? I low-key want one of these letters. There's a good quote from my friend Abe Lincoln's. Whatever you are, be a good one. This dude was so good at losing money that he got a professional letter celebrating it. That's goals right there. Well, I don't have $300,000 to lose. At the time of scripting this, Omni Capital isn't even monetized yet. I need around 300 more subscribers, coincidentally, to start getting ad revenue. If you want to help me make money so that I can proceed to lose it, click the subscribe button. I'm sure all of you have heard of Control the Narrative, also known as GA, but this one might be just as legendary. Smart Money 243 was given millions of dollars to his grandpa's inheritance, and he put most of it into DJT and United Healthcare. Two of the most reliable stocks out there, I know. That's why it's called Smart Money. He proceeded to post a series of losses, each showing how he lost $1.25 million on DJT calls. He even was nice enough to record it for us.
What? Oh, my life is ruined.
Honestly, if you look at this guy's post history, it's unironically disturbing. He's really gone off the deep end. Let's just move on. I wish him the best of luck. I'm actually not sure if you heard the news. Omni Capital got a Nobel Prize for deriving a new fundamental law of the universe previously unknown to physicists. It states that a WallStreetBets user cannot hold a trading gain for more than 4 days before losing it all. This law is remarkable because of how accurate it is, as seen from this video and the 3 other WallStreetBets losses videos that I made before. Oh, you didn't see those? Well, that's because you weren't subscribed. Swimming Tourist 5632 bought puts during a red week and made a bunch of money 3 days in a row. Then, one day, he went all in and made $20,000, 5xing his account. But, I kid you not, literally the next trading day after the weekend, he immediately lost it all. Since the market had been overwhelmingly bearish for a while now, Swimming Tourist was betting on a reversal, and so he bought a ton of calls. Unfortunately for him, the market continued to dump, and all of his gains were erased. 3 good days was all it took for greed to corrupt this pure innocent child, and it ended in utter tragedy. I've always seen this before, even in my own trading account. After a huge gain, your ego gets a big boost, and you're more likely to take on much more risks than you would otherwise because you subconsciously feel like you can't lose anymore. And we all know how that ends. This is exactly why you should never let your emotions get involved while trading. Palantir has been on an absolutely insane run this past year, with it going up 400%. There's a reason why all the congressmen bought loads of the stock. Despite this, user oldspice322 managed to lose money buying calls on it. Makes perfect sense. With an option, there are 2 attributes you can control. There's a time until expiration, which is self-explanatory, and then there's the moneyness, which might just be my favorite term of all finance, moneyness. If you don't know, moneyness refers to the position of the strike price relative to the current price. So, if I buy a $22 call on a stock that's only worth $20 right now, it's 10% out of the money. The shorter the option's lifespan and the farther out of the money an option is, the more risky it'll be. So when oldspice322 bought an option that is betting on Palantir going up a whole 33% in just 2 weeks, you see how that's a problem, since you're screwing yourself over in both time and moneyness. Obviously, if the stock does end up pumping 30, 40, 50%, he'll make bank, but the chance of that happening in 2 weeks is just so low. For every second that option remains out of the money, Theta will decay the hell out of it until it's worthless. If we look at Palantir's stock chart, it's tragic, because the stock did end up going up a lot, much more than 33% in fact. His strike price was $100 and well, it reached $120 in February. But, since the time until expiration was so soon, Theta decayed that option to 0 before he even had a chance to capitalize off that move. If his option expired at the end of February instead, then oldspice322 would be in a very different type of video, I'll tell you that. It's frustrating because he was just so close to making money. If he had just scrolled a bit further out on the option chain, he would have ended up with many thousands more in his bank account. When buying options, anything shorter than like 3 weeks literally just ends up becoming pure gambling, especially when the moneyness of your option is as questionable as moneyness can be. Sorry, I just need an excuse to say moneyness again. You clicked on this video to laugh at stupid WallStreetBets degenerates losing money as a coping strategy to distract yourself from the fact that you're doing the exact same thing. That's why I'm making this video. in order to cope with my own degeneracy. In any case, I'm sure you just want to sit back and laugh at stupidity. But let's do some highly advanced math for a second. WNCM Payne bought puts on Nike stock and they immediately went up over 100%, which is incredible. But the next day, they were down 50%. But some of you might be thinking, oh, so he's still up 50%. But returns are multiplicative, not additive. What the hell does that mean? Well, going up 100% is the same thing as doubling, or multiplying by 2. Going down 50% is the same thing as halving, or dividing by 2. So up 100% basically has the same effect as down 50%, even though 100 is physically a bigger number than 50. This means that losses end up affecting your money much more than gains do. Mathematically, you are primed to lose. If you ever heard the term volatility decay, this is similar to what I'm talking about. So, if you have a huge gain like WNCM Payne did, you're always better off just taking your gains and selling rather than getting greedy and hoping for more, since a loss will wipe you out much greater than a gain will help you. The more you know. Now, everything we've seen so far is mere child's play. A couple thousand lost, maybe a bit over $1 million. But have you ever seen a $36 billion loss? Trust me, it's the wildest story ever. Click here to hear about it. I'll see you there.